All right, good afternoon, traders. Good afternoon. My name is Raul Rivera. I'm the founder of themarketprofile.com. Today is September 11th, 2017. Let's get started with today's trading. So today felt like a very patriotic, very American style rally. Not only is it the anniversary of the 9/11 attack, and it's also a day where we found out the true effects of Hurricane Irma on Florida, and we know it wasn't as bad as everybody had anticipated. So a rally on two significant things that just stand for America. Like rebuilding. It doesn't matter how much you knock us down, we're always going to get right back up. Same thing here. We came together as a country for the hurricane victims, and we also came together for September 11th. So let's focus on the trading here. Looking at the S&P 500, this was the one and only, actually not the one and only trade, but this one was the trade of the day here in the S&P 500. So let me just bring this up here a little bit. Zoom out just a little bit. Okay, so here in the S&P 500, early this morning, we just had nothing but a P-shaped distribution. Okay, I'm just going to go ahead and split the distributions into two here. And this was the shape early this morning. This one right there. Now, it's a P-shaped distribution and also a gap up. Now, the only time you'll ever get a gap up in the futures is during the weekend, okay, from Friday to Monday, or some news between the hours of 5 p.m. Eastern time to 6 p.m. Eastern time, which we had, I think, 2 weeks ago. So 2 weeks ago, it was Tuesday or something. From 5 p.m. to 6 p.m., we got news that North Korea had fired a rocket over Japan or something like that, and it just conveniently happened to be between 5 p.m. and 6 p.m. So when the markets reopened after the 1 hour halt, we saw a gap down. Now, that's a rare type of event, but a gap up or a gap down from over the weekend is usually expected, especially if there is some news in the over the weekend. So we closed down here on Friday. We opened up here, traded higher and consolidated. This is a P-shaped distribution, and it's an organic P-shaped distribution. A lot of times, from a lot of the profiles we always analyze, we'll begin the day with a D-shaped distribution or some sort of consolidation, and then off of that D, we usually get a P or a B, okay, which would equal trending up pattern or trending down pattern. This time it's I call it organic because we didn't need any assistance or any consolidation. It would just rally and go. Okay, so we opened the session right down there, traded higher and consolidated for most of the night session. Okay, not just consolidation all night long, but a rally followed by consolidation. That's a P-shaped distribution. P-shaped distribution is a trending up pattern. So we figured the way to get long this market, the idea would be to get long this market, and the way to do it would be VWAP and TWAP. Okay, so early this morning, right before the market opened, let me just show you guys my fills here. I always try to be as transparent as possible with all my videos. So early this morning, we figured, we got to get long. We're right at VWAP and TWAP. So I went in, got long 5 contracts at 24.7275, and we also had a potential level of resistance based on an area of value on this from this day right here, from that day right there, that profile. And the only thing that I didn't like about that level of resistance, number one, we're in a P-shaped distribution that's organic, okay? We didn't distribute and then create a P. We created a P from the open of the market. And then number two, we had already come up to those highs. We're at least relatively close to 75 and had pulled back to the area that we started buying. So I figured there isn't going to be a second time around. We're probably going to break right through that area, consolidate, and then possibly trade higher. And since there's no other resistance in the market's short-term memory, there was really no real reason to short. In fact, I got long here 5 contracts at 24.72.75, and then I added another 5 contracts to this long position at 82.50 on the breakout of this consolidation. Right, so we had a P-shaped distribution, I got long, and then another P-shaped distribution, I got long, and you know, had a really great trade in the markets today. Here was the golden goose per se, right? This was the strategy. I mean, P-shaped distribution, get long at VWAP or TWAP, and just ride it out, reach as a resistance or higher prices. And that's what we did. I mean, it was pretty much a buyer's market all day long. It's one of those days where we just trended, and trended. 43,914 positive imbalance is what we have so far. What does that mean? It means that out of the, let's take a look here real quick. Out of the 1,860,000 contracts that traded in the S&P 500, there is an imbalance of 43,000 more contracts that were purchased on the buy side than on the sell side. So more buyers than sellers is what this tells me, and it's more buyers than sellers by 43,600 contracts, which is a large imbalance. We've seen larger, okay? We have seen larger, but on a market where the volatility is very low, seeing 44,000 contracts of imbalance is pretty large. And here we can see the institutional traders, they were also long pretty fairly from the exact same time that I started building a long position, but they've actually been long since the beginning of the day, very quietly. Obviously, the markets open early in the morning, and the bigger traders came in and started buying the market during the open hours. So here on the institutional trader, we got positive 12,000 total imbalance, which is a pretty large chunk of this overall imbalance of 41,000. It's going to continue to fluctuate as time goes by, but you know, the plan today was to buy the S&P 500. We bought it. I learned my lessons from August. Okay, August taught me that the markets are beginning to want to trend and continue trending to the upside going into September, and that's exactly what they did. Trend, and trend. This time I was on the right side of the trend, and I made a pretty good killing here of over $3,000 on this trade. Next up we have crude oil, and this one, you know, I guess just lack of experience from my part. I've never ever traded crude oil with a hurricane being the catalyst for everything, you know, from everywhere it decides to go to. You know, I've only been trading for 8.5 years, and I guess you know, I haven't gotten to the point where we had 2 major hurricanes make landfall in the United States, and how crude oil trades based on all of that information that's coming in from, you know, weather outlets and things like that. But 2 trades were possible based on market profile analysis. The first one, we tried getting long 35 to no, sorry, 40 to 50. Tried getting long 40 to 50, 47, 40 to 50, but it didn't work out. When we zoom in, you know, we get a big tell from the market here. Hang on, let me just, it's kind of like a split here, and it doesn't want to split that way because this is the highest set of letters. There we go. And then up here, There we have it. So, you know, for most of the session, we really just had a D-shaped distribution, and it wasn't until A period, which I'm trying to split here little by little. There we go. So it wasn't here until A period, so we had a D-shaped distribution inside day, but because of the monstrosity of this range, I decided not to treat it as an inside day by getting short just above the high or low just below the low. But it just so happens that if I split this distribution into its proper distributions, which would be a B followed by a B, and we could see that we actually had a little bit of value down here, and maybe that was well worth exploring. Not only that, but it's also just under the lows of the D-shaped distribution of the inside day, so getting long in there wasn't too bad of an idea. I mean, of course, if you had a stomach for holding, 40, 50 ticks loss, it made out pretty well. But a couple of things I actually did not like. So number one, look at this profile, right? It's a D-shaped distribution. Here is A period, okay? A period is 9 a.m. to 9:30 a.m. So that's when the market opens. When the market opened, right there, relatively right in the middle of this profile. One of the patterns we also tried to look for is, what's called a move out of the middle. And when we have a singular print, in this case letter A, go from the middle right through support, okay, and then consolidate down here, we're more than likely going to have a possibility that we continue the trend to the downside. So there's no real reason to stay along, right? So I noticed that quickly, and I told myself, something is off here once again. Could be hurricane news, could be just about anything other than real fundamental analysis and or technical analysis. So I got long, my two contracts here, and then I took a loss on them for 5 ticks. Ended up only losing 5 ticks on one contract. So even though I was long 2, I only lost $50 here. And I'll show you what I mean by that. So here we can see I bought one contract at 47.40, one at 47.50. I sold one contract at 47.40, so these two cancel each other out, and what's left is 47.50 to 47.40, which is a 10 tick loss, but on two contracts comes out to a 5 tick loss. On two contracts comes out to just literally $100. I know I said 50 because I was thinking of the 5, but it's I only lost $100 on this trade. So not too bad getting out of a position here that, I wasn't growing in confidence. 20 contracts and greater were selling. At the time, we had negative 4,500 imbalance or so. You can see it's ending the day around 840. So D followed by B, and then we figured the area to start getting longs based on value here between 48.25 to 35. I only got to get filled on one contract here at 48.25. The other, and then I actually let it go towards the end of the day right here at 48.04. Good for a few ticks of profit, few good ticks of profit on one contract. Less than $200, but about I think $170 is what I made on this trade. 17 ticks. At its best, it was good for close to 30 ticks. I was looking for 47.76, which was TWAP at the time. As you can see right now, TWAP is at 47.81. But you get the gist of it. This was the trade here. I had one contract at 48.30 and one at 48.35, but as you can see, the market never made it that high, so I did not get filled on those. Okay, next up we have gold. and this one, I didn't take a trade here in gold today. There was not a trade to be taken. Early this morning, we figured, okay, well, this would have been the area to start buying right here. Number one, we have a value area low from a large distribution, D-shaped distribution. Secondly, we have a value area low right here on this distribution. So even though this value area low here was tested on this day and on this day, there was still value created at that level, which supports the idea that there's certainly some support at that area. It's actually going to be resistance for tomorrow. We can see that the profile has a value area right there. Prices are under it. If prices are under it, it's resistance. If it's below it, it's support. So right now, that's actually become a bit of resistance. What was support has now become resistance. The only thing is, you know, on this trade, let me just split these distributions here. It was during the overnight session that this was tested, right? Here we can see letter W. That was, so we opened right there. Letter W is 6 p.m. Eastern time, so the open of the Globex session. So during the first half hour of the trading session, we traded to that level, right, the value area low, traded up probably as high as 43 from 37, which isn't too bad of a trade, right? But at the same time, it's in the overnight session. I don't trade overnight. Next, it traded lower, distributed, and this was during the open session. I saw this area. I figured, you know what? I'm going to highlight it in yellow. It was already tested in the overnight session. I'm pretty sure that it's probably going to break right through it. Right? Same thing with the S&P 500. We got to a level of resistance, pulled back lower, came back to that level and completely destroyed and moved past that level of resistance. Same thing here. You know, I personally, myself, I don't believe in double tops and double bottoms, right? I don't believe in retests of support and resistance. If we're retesting support or resistance, we're either moving higher or we're moving lower. So here we laid out some support early in the session, came back up, traded back down to it, and then guess what? It trades lower, right? It's almost like a dead cat bounce, right? We move lower, rally, and then move lower to that low, and then we break right through it. That's what they call a dead cat bounce. So that's kind of what happened here. So I wasn't really interested in buying this area. I was actually interested in buying an area a lot lower than it. And we can see here I have it highlighted in blue. I was really trying to get long between 27 and 28, which we almost got there towards the end of the session. Not a lot of selling here from in the gold market, but even on the retest of this area, you know, it explored the entirety of the range that I picked out for this value area low that was right there, and traded higher. So it could have been an okay trade for probably 4 points at its max. But then, you know, when it comes to that retest, it gets there and then it just takes it out. I mean, maybe if you're trading a faster time frame, something like a 3-minute or a 5-minute, there, you know, you'll notice more double tops and double bottoms, and you might be able to take advantage of those. But in a 30-minute bar, there's pretty much no such thing. I mean, here's a low, we took it out. Here's a low, we took it out, you know, so on and so forth. So no trade here in gold, though I was expecting to either get short at the highs up here between 50 to 52 or get long between 27 and 28. And then came the 30-year. 30-year also came close to the zone I was probably looking to buy, but same thing here. And this one was interesting because the S&P 500 rallied very nicely, gapped up, P-shaped distribution, and What did the 30-year do for most of the overnight session? Just consolidate. It wasn't until 6 in the morning when things started to look a little bit weak, and we can see prices traded lower and lower from that area. Notable that we had negative 4,000 imbalance, and as the market was trading lower, we had some buyers. Now, it could be short covering, yes, it could be short covering, but short covering usually come in waves, right? Markets usually take a big dip lower, and then the short covering begins, and you'll start seeing consolidation. And then when the shorting begins again, it's nothing but red that we should be seeing here, nothing but selling. And then another wave of consolidation, which would mean that there's short covering, especially since it's in a downtrend. But we don't see that. We actually see just buyers continuing to get long as the market goes lower. It could be a signal that maybe we should be expecting some kind of a reversal. Today we didn't have any news really that was relative for the markets. Tomorrow is going to be a pretty big one now. Remember, nobody cares about the non-farm payrolls anymore. It's all about the JOLTs report, right? It's all about the JOLTs, the job openings report. And tomorrow we have that at 10 a.m. Eastern time, so be on the lookout for it. In the month of August, that report sent the market rallying and it just spiraled things out of control. And then obviously North Korea made it worse. But people are going to be paying attention to that JOLTS report for some reason, and we are going to have a bit of volatility, which we could possibly take advantage of and turn into opportunity at that 10 a.m. Eastern time hour. But here, looking to short 57, 12 to 16, and looking to get long 19 to 15. We didn't quite get to any one of those extremes. And that was it. No position on in the 30-year. Alrighty guys, so that's all the time I have for today. I'd like to invite you guys who may not be part of the trading room, please visit us, www.themarketprofile.com. Claim your 14-day free trial where you will watch me analyze market profiles live, real time, trade based on the market profile, as well as manage positions live, real time. Not only that, but I also educate on all of the indicators that we use. We don't use too many because too many indicators become too many reasons not to buy and too many reasons not to sell, right? It kind of clashes. We use two major indicators. We use the market profile and the footprint, which is all integrated into one simple software with VWAP and TWAP, and the cumulative tick volume, we call it the CTV, or as some of our members call it, the big boys, because that's what we look for. We look for institutional volume, and we take a look at the sentiment, when they're buying, when they're selling, how prices are reacting, and we interpret this information to help us get out of a trade, help us stay in a trade, or just avoid a trade in general. For example, this this long that I took here in crude oil, thanks to the cumulative tick volume, and volume imbalances. I mean, we had huge negative imbalance. We had institutional order flow of 20 contracts and greater selling the market. It was definitely not something I wanted to continue holding, and I took it off for 5-tick loss, which is a 5-tick loss is certainly a lot better than I was long around 40, traded down to 47, heck of a lot better than a 40-tick loss, right? All thanks to the cumulative tick volume. It'll ease your anxiety in a trade, because without it you're sort of trading blind. You don't know what the institutional traders are doing or what institutional volume is leaning towards, right? We're not looking at just one single player in the market here. We're looking at every single institutional trade of 20 contracts and greater. And we're able to see, the sentiment. Early this morning, it was mostly to sell. I mean, since 3 in the morning, it's been mostly to sell, and it finally came down crashing right there around 9 in the morning. Now, I think it was news. Some crude oil from the reserves had been transported over south to refiners or something like that, and that's what kickstarted this rally off of 47 all the way up to 48 and a freaking quarter. Unbelievable. But based on value, there wasn't a trade down here, so that's why I didn't take a trade. But anyways, www.themarketprofile.com. Claim your 14-day free trial of our trading room. You'll watch me trade all these markets and manage trades real time. And if you're on Facebook, make sure you guys give us a like if you like the video, and leave a comment behind with a question down in the comment section below, and I will answer that as soon as possible. Thank you guys for watching. Hope you guys enjoyed this video, and I will see you guys tomorrow.